So it's Thursday.
Natural gas.
Natural gas inventories. It's just after 10:20 a.m. Eastern Time. And, of course, Thursdays, 10:30 a.m. Eastern Time, we get the natural gas EIA numbers every week. So let's jump into the contract first. We're looking at the April contract. We're trading just above 272 right now, 272.29. I jumped into the spreads on natural gas and start off with the 11 a.m.s. So let's look at maybe setting up a volatility trade, right?
Okay.
Looking at a spread trade on each side with profit potential to the upside, profit potential to the downside.
Right. We just want volatility.
Exactly. So initially I'm seeing in the 11 a.m.s, we're going to have spreads that go from 275 to 295 with 275 to 255. So right away you're going to have a slight bearish bias in here because your intrinsic value is going to be on the bearish side since we're under 275. So this would be your bearish spread. You could be selling this one. That would cost you $31. And of that 31, though, you have about $27 of intrinsic value in here because you're 2.7 pennies under 275. And then on the bullish side, it's all going to be premium because you're 2.5 pennies out, and that's where you can see similar amount of premium. The only difference being you have a decent amount of intrinsic value to the bearish side. So there's your 11 a.m.s. We like to jump around. Let's see how the 12s line up. 12s are going to have the same exact spreads, just an extra hour, right? So you got 275 to 295. And this is a nice comparison. So you can see here, here's the spread side by side. Here's your 11 a.m., here's your 12, here's the price differential. This is going to cost you $7 as opposed to $5.
Right.
So you're literally paying $2 for that hour. It's very quantifiable when that's the only variable that changed in there is the extra hour, right?
Yes.
And on the same thing on the bearish spread now, you're still going to have the same amount of intrinsic value. And again, in comparison, here are the two, and you can see they're $1 off. So you're actually just paying $1 on the bearish spread for that extra hour. So when you combine them, you're paying $39 for the noon trade.
Yeah.
Or you would be paying approximately $36 for the 11 a.m. trade, right? Each of these having a bearish bias in that you have about, all your intrinsic value to the negative side. So if you want to talk about your break even, right? Your break even is away from 275 and you're looking for about 3.6 pennies away in either direction, but you have quite a head start to the downside, right? Now, what if you're a little bit bullish bias and you're like, that's a little tough. I'm looking for maybe a pop, but I want direction on both sides. Well, we jumped into the dailies, for instance. So the dailies, now these are a little different in that they have 40 cents of movement as opposed to the 20 cents that these spreads contain. But they start at 270. Okay, so that's going to change things up decently in that you're going to have intrinsic value on the positive spread, right, to the bullish. So here's your 270 to 310. You could be buying this spread. Now again, you're 2.5 pennies in the money, intrinsic value, and then you're going to add some premium because they go till 230 as well. And then this is going to be your bearish spread from 270 down 40 cents to 30. So this time, all your intrinsic value is on the bullish spread. That's going to be costing you $34. You're going to be paying just premium on the negative spread. So this is costing you about $42. So we went from about 36 on the 11 a.m., about 39 in the noon. This one's being 42. Difference being, this one has till 2:30, and you have 40 cents if you really got to move. Now, 40 cents in one day on natural gas is like almost out of the question. But
but you have a couple cents in intrinsic value on this, too.
To the bullish side.
Yes.
You have intrinsic value in the other ones, too, just to the bearish side.
I understand, but I'm saying you don't need the full 40 cents. Move. To come in the money.
Oh, no, for sure. For sure. I mean, you have, so right now we're trading 2.7 pennies. We're trading 270, 273. And this spread, anything on the bullish side above 270, you have value. So, for instance, if you bought this and then you go to sell it immediately, you're getting back $32 immediately.
Right.
And you're only putting up $44 now combined. So you need 4.4 pennies away from 270 in either direction becomes your break even for that trade. And yeah, as you said, you have quite a head start to the positive side. Be a little bit easier to break even if you get a pop to the bullish side. But you still have both trades. You could execute. You could sell out one. And leave the other one to go. And we have, it's just after 10:25. We have 4.5 minutes till that news breaks. And we've seen some volatility in this contract for sure, even pulling it back a little bit. This is going back Wednesday overnight. This is Wednesday full day. We were just up at 280. We were just down at 271 even in, a few hours ago. As of 8 a.m. this morning, we're up at 275 this morning. So
let me pull up. Let's see where we're at here. So natural gas. Where are you? Let's see.
Right in the middle there.
So now this will be a delayed quote, but I'm just
sure. And it's kind of been hanging at that level for the last 10, 15 minutes, so it's a similar 272.3.
Okay, so you back down. Okay, right there, 270. Oh, that's interesting. So you back down with light volume. You know, it looks to me like this thing's going to stay in this range. And where I'm going, you can see that day right there. What's at the first? The top of the first is 273. You know, with contract value 200,000. Yesterday you come down with 146. It's like, I don't see a lot of movement out here.
Yeah. Well, we're going to know. We laid out the trades. Yeah. Everybody has their market bias. In 3 minutes, we'll be back, and we'll get those EIA numbers, and we'll see how natural gas reacts.
Welcome back, folks. EIA, natural gas stockpiles fell 93 BCF. I think that's what they were looking for.
And they were looking for 98.
98,
yeah,
okay.
And that's a Bloomberg user survey. At least that's one number. You got the median estimate, median analyst estimate. So the stockpiles fell 93 BCFs last week. Gas inventories fell to 1.53 trillion cubic feet. And let's jump back over to the NADEX platform, see how that market is reacting.
Whoa, look at that.
There we go.
That's a move.
So you can see when we talk about the bullish and the bearish bias, right?
Yeah.
If you had been in the 270 trades with the bullish bias, where you had a head start to the positive side, you're almost back to your max loss.
Right.
Right? Because 270 is where you would be looking for volatility in either direction.
Yeah.
But if to pull this back up on either of the 11 AMs or the 12s, let's just jump into the 12s, that would be where 275 would have been, that would have been our bullish spread, which is now far out of the money as this is tanked. And this would be your bearish spread, which would now be deep in the money. You would have been selling the bearish spread.
Yeah.
You would have been buying the bullish spread. So if you wanted to close this out, you could buy this back.
That'd be some bread.
Well, you 47.
Right.
But that trade was costing us about 39.
Right.
So, you know, that at least you're locking in, and percentage-wise, it's a nice profit for sure. Because like we talk about many times, the first move is not always the move that sustains. It seems like it's sustaining right now, that's for sure. These are 5-minute bars. You can see the time in the corner. We're barely 2 minutes after the news has been announced, and we're down about, call it 3.5, almost 4 pennies from when that news was announced. All your value, if you were trading the 11s or the 12s, which would have been using the 275 price point as your pivot point in either direction, your value would be to the negative side. And right now, as this continues to kind of drop a little bit, you'd have $52 of value on the negative spread. And something to consider, you know, let's say that the news wasn't quite what you thought would send it this low, though, right?
Yeah.
Okay, you take your money off the table, and, you know, the bullish spread still remains intact until 12 o'clock. And we've seen turnarounds there.
Right.
For sure. And so, you know, depending on your market bias, what you think the expectation is, what you think is going to happen after that news comes out. But, man, there's volatility still to come in this market as we see it, and it'll oscillate.
There certainly is.
We'll check back in on it in the hour.
And what's intriguing about the natural gas market is that, you know, we're coming into spring.
Yes.
We know that the Northeast had a bad, you know, couple weeks. That's
They've had 3 storms in 2 weeks
January
to start
9th.
off March.
Exactly.
No, January. Since, I think, March.
Yeah, 3 from the end. Oh, well.
Literally, it's March 15th. They've had 3 nor'easters that have come in there in the last 15, 16 days.
Yeah.
But yeah, the weather is changing. We're coming into the spring across the country. See how that shapes the natural gas market. All right, we'll check back in on it. Currently trading 269.47. Let's check back in on natural gas. So it's 10:54. We've had about 25 minutes since those news numbers, and we continue to decline. So currently trading 268.17. We were up at just about 273 when those news numbers broke, so down about 5 pennies.
That's a big move.
It is a big move, and it's a big move, especially within the first 25 minutes of that number. And so to jump back to, you know, we looked at maybe the 11s, the 12 o'clock spreads that expire at that time.
Yes.
Those are the ones at 275 would have been your price point. You were looking for volatility. All your value would obviously be to the negative side. And right now, you know, you're looking at about $66 of value in there because it's 6.6 pennies away from 275.
And that's the noon.
And that's the noon. That one would have cost us about $39 for both contracts. But I wanted to just highlight real quickly, if we jump into the daily ones, right? Now, the daily ones were the ones that were using 270.
Yes.
So that's where we would have started with almost 2.5 to 3 pennies of intrinsic value to the positive side. And even these now we're below. We're almost 2 pennies below. So jumping to the bearish 270 spread that goes all the way down to 230,
okay,
we're approaching now, even there, we have about $23 of value. So you can see how, you know, when you're making those volatility trades, yes, you're starting with a bullish or bearish bias, but there's a reason why you're still executing both of them if that's kind of your bias in the market in terms of looking for volatility in either direction, with a bullish or bearish bias potentially in one way or the other. And we'll see where this goes. You know, you still have both of these spreads to remain open, and this one was costing us, I believe, 53, right? Somewhere around $50 for both contracts. So even there, you're looking at basically a 50% loss currently, but with 3.5 hours left to go in the day. We'll see. We'll see, for sure.